Hello everyone, welcome to today's US Open live webinar. It is Thursday, 2nd of February. We're 10 minutes before US markets open. This is your host Nikos Zabouras, Senior Market Specialist at FXCM. It has been packed day, very eventful, as we had rate hikes by the European Central Bank and the Bank of England. In fact, ECB President Lagarde is still speaking for around 30-40 minutes now. Her speech is not over. And this, of course, comes hot on the heels of the policy decision by the Fed yesterday. We also had earnings reports from Meta and expect more from the tech sector. So we have a lot to cover. However, before we begin, as always, please read carefully the risk warnings and the disclaimers. Okay, let's get the ball rolling because we have a lot of things to cover. Back on Tuesday, we talked about what to expect from this week's policy meetings, this central bank blitz, we would say. Now we have those decisions, and as we watch EUR/USD, let's start with an overview of what we saw, and then we will talk a little bit more along with the technical outlook. So let's start from the latest one. The European Central Bank raised rates by 50 basis points as expected and stayed on its hawkish path, providing explicit guidance for same move on the next meeting in March, when it will assess incoming data along with the updated projections. Now, the question is what happens next after March. President Lagarde was asked in the first question during her press conference, which is still underway, so we may get more things. There, she definitely said that that doesn't mean the end of hikes, but she wasn't as straightforward around whether there will be a peak in the pace, meaning that 50 will be the highest and then we will go to smaller increments. The euro is a bit pressured and DAX goes higher again. The main question now is what will happen after that, but it's still a long way with main data points to chew on, both for markets and ECB officials. Now, a little bit earlier, we had the Bank of England that, surprisingly enough, did not offer any surprises. Let's put it that way. It hiked by 50 as well basis points as expected, and the two dissenters wasn't also unexpected. It was a bit of a dull affair, though, not typical for the Bank of England, I would say. But we will talk a little bit more about that later on, along with the GBP USD analysis. And of course, yesterday we had the big event. The US Federal Reserve downshifted again with a small 25 basis points increase and maintained guidance for ongoing increases. Chair Powell was hawkish and talked for a couple of more hikes, but the pushback against market expectations for one more move and rate cuts in the year was weak at best. And he also acknowledged the fact that disinflation is underway. Of course, Wall Street rallied and the US dollar was pressured. Of course, as we talk, if you have any questions or if you want to share your opinion around those central bank meetings and the other things that we talk about, please feel free to type those in the chat box. Before we move on, let's talk a little with analysis, the technical analysis. Let's also touch a bit on the earnings season. We have already talked both in this series and through separate video that we have posted that we have big tech earnings from the United States. Meta Platforms, the social media giant, is already out. Markets reacted positively. In fact, it was gaining around 20% in pre-market the stock, and that is why, and the reason why is that CEO Mark Zuckerberg sounded a message that markets wanted to hear. He announced a 40 billion share buyback, lowered the 2023 cost guidance by around 5 billion, and he also dubbed 2023 the year of efficiency, as the troubled firm will focus on becoming stronger and more nimble. We have to know though that financial weren't really that good, and Reality Labs remains a money pit. Reality Labs, of course, being the segment that is responsible for delivering the metaverse. We also expect more tech heavyweights, Amazon, Apple, and Alphabet, follow suit after markets close today, and of course, auto giant Ford Motors will also be closely watched. Earlier in the day, staying on the earnings front, we had the UK-based energy behemoth Shell posting record annual profits of almost 40 billion. So that's it with the overview. Let's go a little bit in more detail. We see Euro USD here. The pair comes from a 4-month profitable streak, and of course policy is supportive. We have discussed how the ECB has out-hogged the Fed, as it has more ground to cover, extended its gains after the Fed decision. Of course, let me say this: we have already covered in detail the outcome of the Fed decision and its potential implications via written article on FXCM's market analysis website, so you can go there if you want more details on that. So where we stand now, although it did face some pressure during President Lagarde's press conference, Euro USD is now on track to take out 1.1067. That will open the door towards 1.1274. However, we'll need to see where the whole policy debate settles. And the big question is, if the Fed pauses in March, can the ECB truly continue? That's what they are saying, but again, it's an eternity until then, and many data points to go through. Now, from a technical perspective, a pullback towards the 200-day period EMA around mid-107s would not be unreasonable, but we haven't seen anything from the ECB at this stage to corroborate for further and sustained weakness below that level. That's it. Again, the decision is just out, so we will need to see how market digest all those events. Now let's move over to GBP USD. Which also benefited from the Fed decision. Again, we said that despite the hawkish message, it was not forceful. Pushback against market optimism for a Fed fibor was feeble at best. And however, today we had the Bank of England, which, as we said, hiked rates by 50 basis points, but it was a dovish hike. It dropped the forceful reaction if needed, and also previous guidance for further tightening could be required. So all in all, it was a dovish hike, 2 descenders. We were expecting that maybe more descenders in favor of a pause would emerge. That did not happen, so all in all, a dull affair. It also updated its projection, now expecting shallower recession, still a recession though, and inflation to come down starting with the current quarter. Now, it's on the back foot. GBP USD is on the back foot. And now there is a distinct risk of breaching this key area, key support area here, but it is still early to determine whether sustained weakness below this level can ensue. And of course, we have more data points coming in at the end of the week, and we will talk as usual towards the end of our session about that. Now, both this region, of course, bias is tilted to the upside, and the road for higher highs towards 1.2667 is open, but impetus is definitely needed, and we're generally cautious given the dovish hike by the BOE. Now let's go back to Europe and check the German index. So as you can see, the index reacted positively to the ECB, mostly because this scenario was largely priced in and expected. ZER30 has started the year in the offensive, despite this aggressive tightening by the ECB. And there are many factors that play into that. One is the fact that the Eurozone, the Euro area, avoided a recession in Q4 according to yesterday's preliminary data, and there is some encouraging results, other results in terms of PMIs and all that stuff. We had a mild winter, which also helped with the whole energy situation, and of course China reopening is also supportive. Now that brings us to close to the February 2022 high, this region here, and quite frankly, we cannot see what will stop it from setting new record highs, given that it has reacted so well to the aggressive tightening by the European Central Bank. Of course, this is where the current historical highs lie. Of course, a pullback may be required for further advance. We can see a test of the 15K mark, although convincing break below the 200 period EMA and sustained weakness below this level does not look easy, again, given that it has reacted so well to the ECB decision. Again, if you have any question or any thoughts on what we discussed, feel free to type those in the chat box. And let's round things off with the SPX 500. We have already posted an analysis on the website in regards to the tech-heavy Nasdaq. So let's focus on SPX 500 on this session. You can see here the positive reaction, which is extended today. It rallied yesterday to the highest level since August. We said that rhetoric was not aggressive by Mr. Powell, not enough to douse optimism for a pivot. And now we have this region here around 4,326, 4,312 in the spotlight. It's the high of that month, August. Although strength above may prove elusive in the near term. On the other hand, there is a chance that markets are overly optimistic about disinflation and the Fed's resolve to and underestimate actually the Fed's resolve to restore price stability. Also, the move looks overextended from a purely technical perspective, and cautious tones may prevail ahead of more data and busy earnings calendar. As such, pressure back to the 4K handle around here would be reasonable, but again, you can see how we have a significant confluence of supports below that level. Now that's it from the technical aspect. Let's talk what lays ahead. We expect at the top of the hour US factory orders and a series of PMIs tomorrow. The main event, of course, is the US NFPs, the employment report on Friday. The labor market is still extremely tight, according to Chair Powell from his yesterday's commentary. And of course, unemployment sits around 50-year lows. So the question now, given that the disinflation progresses relatively well, far from done, but it seems to be on the right path, that puts focus on the other parts of the mandate, the labor market, and whether pain is needed, the situation needs to deteriorate, because so far it's relatively robust. So we will be closely looking this as well. And of course, ahead of our next meeting session on Tuesday, the Reserve Bank of Australia will announce its latest policy decision. It will be very interesting to see what happens after the recent inflation surge. We had commented about it. Will it stick to the recent small 25 BPS hikes, or is there room for more? That will be another thing that is interesting. So that's pretty much it from us. As we said, we will be together again next week on Tuesday, 16:20 GMT, 10 minutes before the US Open. Thank you for joining.